Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong life for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Good morning, everyone. Morning. Wealth Coffee Chats. Here we go. Hope you're good, folks. Good to see a few of the early birds up and at it. Brendan, morning, mate. How you doing? Facebook user behind the veil, but whoever you are, good morning to you. James is there as well. How are you, James? And Fritz, mate, how are you? We need to book that meeting in, Fritz. It's on my list. Let's do it. All right. Well, listen, had a couple of little technical glitches this morning. Started a bit late, but better late than never is the saying, isn't it? Hopefully that is how it pans out today, folks. There you go. No, that doesn't really work, does it? Let's get into the show. Welcome. Do the quick intros as things are warming up and people are jumping on. Jason Whitton's my name. Most of you know that already. I'm sure you do, but if you don't, if you're new, say hello in the chat. Great to have you here, folks. Good to get you along. Jeff's here as well. Morning, Jeff. Great to see you, mate. Andrew, thanks for dropping by. And a big hello to some of the people who are watching the replay. Sometimes you don't get to see the live, but if you're watching the replay, hello to you. Great to have you here, no matter how you're consuming the show or getting the info. We might dive straight into it this morning because in the last couple of days, kicking off on the 1st, we had Dr. Andrew Wilson giving us a bit of a lowdown on what to expect maybe in the next 6 to 12 months in the property game in Australia. And tell you what, folks, for those who are capable and can and own property, who can buy and or own already, it's going to be all right. You're going to have a good time. You know, manage your cash flow. That's the thing that's kind of giving us all a little bit of a pain in the pocket at the moment. But things are looking pretty good if you're in the game of ownership and property investment. But what I wanted to do is continue our little journey. Like I said earlier in the week, we're going to go through maybe a 2 to 4 week process of breaking down each of these little bits of our strategy work, our setting our goals, and just a bit of a check-in to kick us off for the year. Yesterday, we talked about where are you now? Check in on your finances, check in on your money, your strategy, your knowledge, and make sure if you know where you are. And then the next part we're going to talk about is where do you want to be? Where do you want to be? And maybe start to talk about how we're going to get there. What's holding you back? And we'll do that sort of tomorrow. And so on, and we'll get some mojo on. We're going to break it down into a few bits. So today we're going to talk about this part, which is where do you want to be in this thing in the future, a time frame, a dollar, a cents, whatever, and we get to sort of reverse engineer, folks, don't we? We get to reverse engineer, this idea as we go along. Let me see if I can get us out of this one. There we go. So where do we want to be? Into the future, if we look out into the future and, we draw a timeline for investing, and this is now. Now, it doesn't matter if you've been investing for, I don't know, whatever it is, 5 years, 10 years, 15 years, 20 years already, where are you now and where do you want to be? What's the question? And usually we have to answer that in some mechanical terms, some mathematical terms, some financial terms to sort of have something to aim at, ladies and gents. But ultimately, there's reasons why. You want to look after your family. You want to, have a better quality of life. You want to get some time back. You want to do some projects, whatever it is. But that costs money. For most of us, it's a lack of money that's needed to unlock some of the quality of life stuff that we're looking for. How are we going to go about that? So put it in the chat for me, folks. Usually it's a reverse engineered function of what I would call passive cash flow, right? A passive income. So in the future, what's your passive income? Passive income you're aiming for in the future. What's your passive income that you're aiming for in the future? That's what you've got to know. And you've got to keep that high in your mind, or at the top of your mind. So chuck it in the chat. Play along with me. What's your goal? What's your passive income out into the future as you go? And, what does it look like? Where are we going? Put that in the chat. What's your passive income? Usually, for me, when I sit down with people, it's between 100 and about 150K of passive income for a family. For a family with no owner-occupier mortgage. No owner-occupier mortgage. So the destination in the future, the debt that you have on your principal place of residence, which is bad debt, right? Debt that's not tax deductible. It's not creating an income directly, et cetera, is paid off. Even if you're using your principal place of residence as your security, using it as deposits for other things, that's fully tax deductible. It's fully creating income. Okay. So anyway, we won't dive into that in detail today. So where are you now? Where do you want to be? And, we've got a few people in there saying, 300K for a couple. Usually we do it with a couple. It's 200 to 300 for a couple if they're both, focusing and working and charging along. Whatever your number is, 200 million tonight, that's a lot of dough, Jeff. It'd be pretty sweet to nail that one for sure, right? So, 100K, 200K, 150K. So there you go. So let's do it. Let's use, a really simple number in 150 or 100K. Okay, so I know the math on that off the top of my head, but, think about this. So where are you now? And if you go, all right, I've got one investment property and I've got 25K of passive rental income. Now, we're not talking about the expenses just yet, so roll with me on this. So technically, if we have a quick, rough mathematical equation on this, if I wanted 100K, the first goal, folks, is to acquire your portfolio, right? Do the math on your portfolio, and have a rough plan. Now these plans often don't go perfectly together, right? Perfect. Nothing's ever perfect, but we have our rough plan over the next period of time, right? And put that in the chat for me too. Put it in the chat. All right, we want, 150K passive. And what's the time frame? So if we go, and this is where we look at those stages. So I'll talk about the stages of property investing in later Wealth Coffee chats, but this is kind of like, this is what we would call, folks, you guys know the drill. This is the acquisition stage. Don't get confused. Don't get distracted, confused, misunderstand the concept of, I need to pay my debt off and I need to buy properties, right? Or use leverage, borrow. Folks, most of us don't have sufficient income, and if you do, then you might include some debt reduction as you move forward as well. But most of us need to put all of our resources at the beginning, literally every spare cent we have to get this ball rolling, right? So the first 1 to 3 properties, folks, are the hardest. They're the hardest, okay? as we go. So in the acquisition stage, it's all in. It's all in, folks. It's all in. Now, your definition of all in needs to be, talked about with your partner, your spouse, your mortgage broker, and your team. But for me and Shay, when we were all in at the beginning, literally every red spare cent we had went into building our property portfolio. Every dollar. We had a few little holidays here and there, but we were all about the build phase, folks. It was all about getting this ball rolling, all right? And I know many of you are like that too. So where do you want to be? You want to be out here with 100K. First things first, you need to acquire that income as quick as possible. So let's say over a 7-year period, you could purchase 4 properties, 4 investment properties, all right? I certainly know, depending on where you're starting, 4 could happen within 2 to 3 years, maybe up to 5 to 7, depending on, what you do and how you purchase and where the market's at, and a bit of capital growth and a couple of things going your way, right? It depends on your ability to borrow mostly, but, this is kind of a linear concept you can apply to your personal situation, right? So as quick as possible, buy the income, because into the future, there's 2 levers, there's 2 maneuvers that are going to happen, folks. What are the 2 things that will happen? And when I say passive, I hate the word passive, but as a function of ownership and economics, as a function of owning property and the economic process that we live in Australia, what are the 2 things that will happen almost automatically into the future that will help you get to your goal if you have enough patience and capability to go the distance, folks? What are the 2 things? What is going to go up over time? And recently, boom, absolutely, Tom. Capital growth, perfect. That's value, but also rent growth, right? So the rents will go up, folks. Rents will go up and the value will go up. Now, here's what history shows us. Yep, rent and capital growth. Chris, perfect. Here's what history shows us, folks. Over a 12 to 15-year period, if we look back, looking back is not the future, but it gives us some ideas of how things behave, just so we're all clear. What's the capital growth value in sort of percentage terms? What's the average in the past 50, 60 years? I'm trying to sort of ask you the question without giving away the answer. What's the average capital growth or percentage of growth for properties, residential properties? 7.2, yeah, exactly, Belinda. It pretty well, 7% or more, a property doubles in value every 10 odd years. At 5.5, I think it is, 5%, yeah, a property will double every, I think it's 13.8 years or something like that. So every 15 years. So your property value. So folks, seriously, I see so many people start out with property investing and they fucking choke on it halfway through because they don't have the patience and they expected property values to, go up linear and whatever. Like I've had some great clients who purchased up in Toowoomba, and we were 6 years in, great properties, fantastically located, 6 years in, and they're like, oh, they haven't done much, I've had enough, I'm going to sell them, 4 years later, folks, 4 years later, so we're 10 years in now, those properties have doubled and then some, right? I just see it all the time, sadly. So stick with it, right? Stick with the plan. The plan is you buy good properties that you're happy to continue to own and put into minimum 15 years. If you're not prepared to do that, don't do property investing. Do something else. Go start a business. Businesses can create cash flow far faster, but the volatility of them is pretty mad. Anyway, you understand what I'm saying. So what else goes up though, folks? The rents. Sharon said it as well. Chris said it. Rents. Your rents will go up. So you bought 100K here, and in 15 years' time, statistics show that the 100K you purchased here, folks, following along, like I show you something, 100K you purchased there, on average, will be 150K of rent in 10 to 15 years' time. So in the future, your properties are growing in value, which means your loan, let's do this, your loan to value ratio is now 50%. And if your loan started to kick into principal and interest, let's say in year 5 or year 10, talk to your coach about that, how we manage our cash flow at the start. And your rents have now gone up 50%. So your properties have doubled 2 times, and that's gone up 1 times. I don't know if that's the right statistic, 1 time or whatever. Anyway, it's gone up 50%. Folks, now we're looking good, okay? What is the other thing that at that point may have gone down, folks? So your values and rent and your cash flow has gone up, and, depending on your strategy, your debt will have gone down. Inflation eats away at the debt. You're dead right, Brendan. And inflation accelerates often the rents, right? So this is the thing. That with inflation, the last few years, our rents have skyrocketed. Absolutely skyrocketed, folks. The interest rates have helped our rents go up, right? So what happens, ladies and gents? At some point later this year or maybe next year, the banks are going to reduce the interest rates. That's what's going to happen. We know that. This is not, I'm not having a guess. It's economic theories that have shown again and again, things go up, down, always, right? So what happens? Any of you, tell me in the chat, give me a big yes or no. All right, the interest rates go down. Is anybody going to reduce their rents? Are you going to drop your rents? Alex, Brendan, Chris, Belinda, Sharon, Tom, any of you going to drop your rents? You're going to go, nah, that's it. All sweet. Inflation's down. Interest rates are down. Let me drop the rents. Are you kidding me? So folks, yep, rents stay the same. You're dead right. It's not going to happen. So, and this is the other thing. The misunderstanding of investing is that, I bought it today, I should reap the rewards today. No, that doesn't happen, folks. Probably for the next year or 2, you might feel the pressure on owning that bit of real estate. You're like, oh shit, this thing I have to put some money in. I think let's start a hashtag for sure, Brendan. And you're like, oh, it's not working. But you know what happens? Fast forward 5 years, when you're taking money out, or that money is now, the cash flow is positive on that property and you buy another property, what we forget to do is remember that if you weigh the ins and outs over time, you're always going to be ahead if you've got a good quality property, like what Chris said, right? Flight to quality. So, folks, this is the drill, right? Where do you want to be? Know the number, know your cash flow number, and reverse engineer the number of properties. And it doesn't have to be perfect, folks. If you could do it in 3, fabulous. If you do it in 5, do the average math. What's an average good quality property worth these days? 650 to 750. It used to be kind of the 500 to 600, and the good quality things have gone up a little bit. So just do the math and say, all right, well, I need to get 4 under my belt straight away. If that's where you want to be, now this is kind of showing us what we need to get up to, what we need to do. All right. We know where we are. My ability to borrow is 700. I've got enough money right now for 1 deposit. My confidence and my knowledge is great. I'm ready to go. That's where you know where you are. Some of you might be like, oh, I've got a credit card I need to get rid of. Some of you might be, oh, I need to get my finance done because, you know, I need to whatever it is. You know where you are. You need to get some stuff organized. And then where do you want to be? Don't overthink it. Oh, I've got to buy the perfect property. Is it positive cash flow, negative cash flow? Is it a unit, a house, a townhouse? No, none of that matters right now. Know what you've got to do, and later on, we can adjust the tactics, the tactical implementation. And I'll talk about that, you know, for all of us. What type of tactic strategy do we employ? You know, is it, you know, an off-the-plan deal? Is it an older property that you renovate? Is it a existing property that's already ready to roll? You know, is it a house and land where you're adding some value? You know, all of those strategies work, all of them, depending on where you're at and what you need. So that's a later conversation. But the most important thing is to know where you want to go and what's it going to take to get there. It's 4 properties, and then you know, come hell or high water, just get after it, folks. Get after it, because the details will unfold as you go, right? I don't know who's ever heard the saying, analysis paralysis. Of so many people sitting around waiting for the best property. And I'm like, shit, mate, I see the best property every other day. Just buy some great properties when they come along, when you're ready, right? If you're ready now, get on with it. You know, get a good deal. Talk to your coach, talk to your PC, talk to your broker, get yourself ready. Let's go. Anyway, there you go. Getting excited. Anyway, I'm pumped for 2024. Hope you guys are too. But, you know, hey, where are you? Where do you want to be? You know the steps. You know what it's going to take. Let's go. Let's go, folks. Let's do it. All right, there you go. Anyway, that's it for today's Wealth Coffee Chat, ladies and gents. Tomorrow, we'll talk about some things that might be in the way, what's holding you back, and we'll systematically go through this tactic strategy conversation that, you know, most of you will be having with your coaches anyway, but we're going to break it down and maybe give it a little bit more depth as we go along. So it's good to hear. All right, folks. Yep. Pumped as Chris for sure. Yeah, Belinda. I hear it all the time. You know, I've analyzed 50 properties. I don't know which one to buy. Well, I think you're overthinking it. Anyway, there you go. All right. Thanks for joining me, folks. Great to have you here. Awesome. Awesome to have you pop along. If there's something that you want me to cover, or there's some ideas, some thoughts, some pontifications, put them in the chat. I'll always read them afterwards. And join me again tomorrow at around about 8:10. Hopefully technical difficulties won't hold me back. But yeah, about 8:10 tomorrow, folks. Actually, tomorrow I'm not going to be doing it at 8:10 because, ladies and gents, I've got a show on tomorrow, so I might end. That's what I'll do. I'm doing business wealth presentations for business owners. If any of you are there and come along to that, check out there. Ask your coach. Anyway, yeah. Won't be to me tomorrow, but it'll be my way. All right, folks, that's it. I'm just dribbling on. To go. And, from me, a couple songs around here. I won't sell, not a sprint. You guys know the drill. Anyway, that's it. Good to see you. Bye-bye. No.